Hey, welcome to the Closing Beat, everybody. Happy Friday. Did you have a good week? I can't hear you. I have no idea. Hey, welcome to our show. It's the Closing Beat, just a fun name to give a show where we cover the stock markets, go over stuff that's happened throughout the week and, of course, throughout the day. We'll talk about the stock market there. As you can see off to the right-hand side of your screen, funny story, realizing what a small world it was. So I'm leaving my house today and got my coffee and everything. I'm backing out of the driveway. I start going forward and there's someone walking at the end of the street and, he just catches your eye, like something's moving. So I look at the person, and as I'm driving, I'm looking away and I'm like, that's one of my customers. I recognized their truck and it had their name, the company name on their truck. And I'm like, wait a minute, I recognize that name. I'm driving by, I'm like, that's incredible. What a small world. I just drove right by them. So I had to reach out and let them know that I was spying on them this morning. But small world. Speaking of that, we're financial advisors. We're a small company. And so we specialize in just teaching and we're building our own dojo. We want educational-based financial advice rather than just say, give us your money and we'll invest it. We use our own portfolios. We like to teach about that as well. And actually, if you give me a second, I want to go into the dojo. It's our new portal. We built it 100% custom here. What I want to show is where you can see the classes. So last night we did a great class on updating our funds. You can actually just click on it right there and see the most current 4 classes that we have. But if you go off to the right-hand side of your page, and you go into, where are we going to go? We're going to go to the classes and research. You can actually go in there and see the previous classes and search. So there's a lot of them in there. Take a second to load. Here's some of the more prominent ones. We've got some research posts that aren't published yet, but here's the class. You can watch it. It'll pop up. If you click on it there, just kind of start showing you the class and everything. I don't want to do that, so I'm going to get out of there. But you can keep going down, and you can actually see all the research posts and everything. One other thing I want to point out is you can search over here to the right. So if you just want to search hey, Nest Egg, what's going on with you guys in Nest Egg there? I'd like to see some of the classes that, there we go. You could see any of the tutorial classes that we have, any classes I've done where I get kind of geeky about it, any updates and things like that. There's just all kinds of good stuff in there. So when I point that stuff out, I'm not kidding. There's a lot in there that we've built over the years, so just wanted to share that with you. Also, Monday, stock market is closed. It's Martin Luther King Jr.'s birthday. Actually, today's his birthday, but we celebrate on Monday, and the stock market closes, your banks are closed, things like that. And so there'll be no show, right? So we won't do anything there. All right, let's dive into the markets here and take a look. You can see it was a down day, and actually after hours, the market's down even more. The Dow after hours is down 1%. Make sure. Yeah, down 1% there. The S&P is down 1.2%. The NASDAQ is down 1.1%. The Russell down almost 2%. So after hours, with the little bit of limited after hours that we have on a Friday, stock market sold off even more. If we take a look over here at the charts, just a bit of a pullback. Now, yesterday, I made the case for the stock market being extended, but not showing you that it's extended. It was one of those rare cases where if you back up a day, you would say, oh, everything's fine. Stock market's just trending higher. And then wham, out of nowhere, you get a pullback day. Why was that? So we made that case yesterday that you had Apple really doing nothing. Apple basically going sideways over the last month. Amazon going sideways over the last month. Tesla not going sideways, but very extended, right? And then you had Microsoft as well. Sideways, just a very, very flat performance over the last month. So if you take those names, you now have 17% of the S&P. Let's call it 20% when you round in the decimal points there as well. And while they did nothing, minus Tesla, well, those stocks are doing nothing, the other 83% of the stock market was actually getting overheated. Extended, financials, energy, small caps, values, all these different areas were very, very extended. So it was a really fun class yesterday to kind of show you're getting lulled into this calm, quiet market, but in reality, everything over here is doing the heavy lifting, and those all started pulling back today. So if we go to the Russell 2000, finally got a pullback there. The Russell 2000 was the biggest decliner today after hours, like I said, down about 2%, but it's also been the biggest gainer. We were talking about this yesterday, that this pace of the Russell's gains is just not sustainable. It was up 8% in the first 2 weeks. If you look at the average performance for an entire year, over the last 40 years, you get 11.8%. So we did 8% in the first 2 weeks when the entire year averages about an 11%, let's call it 12% gain there. So this gain that we've seen here, kind of another way to highlight, it's just not sustainable. Looking over to value, they took it the hardest today, but it's been the leader, so it's kind of all relative there, not really a big deal. I'll show you a different way to look at it here. We go over to, here's the IWM, the Russell 2000 over the last 3 months. If you add in the value stocks, they are the better performer. If you look at Russell 2000 growth stocks, they've been the laggards. You got a difference of about 4% there between highs and lows. Let's just take out this garbage here. There we go. So you got about 4% between highs and lows, and they Russell 2000 value was the ones that really kind of the weakest on the day there. If we go over to the NASDAQ, second biggest loser today, and why was that? Semiconductors, right? We talked about the semiconductors being extended and already starting to pull back yesterday. Today, most of them were the weakest stocks in the NASDAQ, and that's the reason for it. It's responsible for about a third of the losses today in the NASDAQ, just the semiconductors. So you get a good view as to kind of one day over the other. The lesson yesterday and getting to see it in real life today. Very fascinating. We're looking at that Dow. The Dow was down as well on the day, and I'll just quick kind of point out, Home Depot did its job. I mean, it was up 2.7%. I believe it was the best gainer in the Dow there. But energy and financials, they were the weakest ones there that really kind of dragged us down. You got Goldman Sachs pulling back. It's been the outperformer in the financial space. Very normal for it to pull back here. In the energy space, in the Dow, you got Chevron down 3.5%. That's because oil pulled back. And take a look at the price of oil. It too was extended. You're seeing this just kind of across the board pullback. I would point out Boeing. That one also pulled back 2.6%. So Chevron, Goldman Sachs, and Boeing are responsible for most of the losses today in the old Dow. If you want to look at the S&P 500, you've actually got to go into the individual sectors. So we'll do that. We'll come on over here to our little tool that's in the dojo. If you're one of our customers or research members, you can go in there and take a look at this as well. Here's today's performance, split pretty much across the board. The problem is financials and energy were the big drags down here. 4% lower for energy, which is not a problem, right? I mean, take a look at this run that it's had here. Just year to date, if you want to look at, well, we'll just kind of go like this. Year to date, you've got still a 12% gain. So all the way up to 17.3% gain and pulling back. Totally normal, not a big deal. Financials, the other weak spot today. That's going to be earnings related there. And actually, if we go over to taking a look at the financials, remember, in the sort of short term, very extended there. If you take a look at some of the weaker ones today, I'll click on JP Morgan, but notice how all the other ones highlight in here. These are their closest competitors. They were all down as well, and unfortunately, they account for a larger weight inside the old S&P 500. So that's what you have there. If you're taking a look, that's pretty much all I'll cover sector-wise. What do you think? Kind of a crazy one there, huh? That is pretty interesting how the things have pulled back and we were kind of getting into things like that. Yeah. You think the glass looks red today? That's funny. Yeah, this is the tap, by the way. Can I show it without breaking anything? There it is. This is the magic tap. It guesses the stock market. We'll have to do a video on that to show you how that all works. Hey, I'm going to do a watch list here for you if you got a minute, and then I'll take some questions and things like that. So watch list wise, we've been talking yesterday about extended stocks. And today we're going to look at the most extended stocks in the S&P 500. So I put a list of them here together for you. We're going to go through and look at a few here. You've got to expect pullbacks in these names, or at least be in kind of a profit-taking mode if that's what you think is interesting here, if you're rebuilding a position or something. Now, as you look through the list, I'm going to just kind of question, do you notice anything interesting about that list? We'll start with Tesla because I see that's the first one up there. It's a hard stock to short. There's been many hedge funds, many of sort of headline type fund managers that have been crushed by trying to short this thing, and understandably so. It's a great run there. 41% above its 50-period moving average. Tesla does not get or stay 41% above its 50-period moving average. You can look back and test this through time. You are not going to see this. Also, its rally over the last 1 month, 32% in just the last month. That's not sustainable. There is nothing that Tesla has ever done to show that that kind of a rally is sustainable in the long run. You're going to have your pullbacks, you're going to have your rallies, right? But it's not going to go in a straight line forever. So that's that one. I'm going over to Occidental Petroleum. It is before today, it was 50% above its 50-day moving average. It is also the most extended in the ultra short term, just as a heads up, for all the ones that we're going to talk about here today. We happen to have warrants on this stock, and we're getting very close to our exercise price. Very fascinating, the warrants that we were issued there for free, that we were just given to our customers if we happen to own it back in August, I think? I think it was August. So that's Occidental Petroleum. Moving on, Diamondback Energy, ticker symbol FANG. Extended here by 41%. Also one of my favorite picks for the year. We happen to own it, so I'm excited about that doing well. But I know that it's not going to just go in a straight line to 90 bucks and we ring the register and all is good. It's going to take a little bit of time here. Of the list that you see on the right-hand side of your screen, this will be the one that pays the highest yield, or currently has the highest yield, about 2.5%, somewhere in there. Marathon Oil, 38% above its 50-period moving average. 38% above its 50-period moving average, which is about the gain that it's had this year. It was about 30% gain so far just this year. It has gained over 12% in 1 week. That's pretty impressive, right? Got a 30% gain so far this year. That made me wonder. I'm going to go over here, for better or worse. I'm just going to do this here. We're going to say Marathon Oil greater than a 12% gain in 1 week. 20 years we can look back. Let's see what happens here. How often does it gain 12% in 1 week? Actually, I think I have more info on this as well. So check it out. Basically, once a year, it's averaged a gain of 12% in the course of a week. Here is every single time that has happened, over here, sorry, 12%, 23, and so on and so on. It shows the week ending. I don't know if maybe we can blow it up a little bit. Here's the week ending, shows what happened the previous week, and then we've got what happens the week after. And in fact, I believe I've got this guy here for you. Anytime Marathon gains more than 12% in 1 week, here's all the history here of every time that it did it. The average gain, 3.1% going into the week after. That's interesting. I thought I just got done saying this was all very extended. Median gain, 0.86%, positive 60% of the time. Why would it continue to be a gainer? Look at over here. Next window, down a little, down a little, down a lot. Here's where we're getting this data from. We got a little bit of a skew in 2016. There you go. Ultimately, the momentum in Marathon Oil, when it gains 12% or more in a week, continues to the upside. Why do you think that is? If you notice that oil stocks and the price of oil tends to trend, right? So even when you have these rallies, you go, that can't be sustainable, man. I mean, it's got to pull back. Even when you see that, if it happens to be an oil stock, that's the lesson of the day. Don't bet against that, right? You can take a little profit and try to add it back, but oil stocks or the price of crude oil futures, they tend to trend, and they don't have these large pullbacks and large rallies and large pullbacks in a short term. They're going to just be nice and steady, so very fascinating there. If we look a little bit further here, let's say 30, so it's up 30% in the last month. Let's go back over here. Anytime Marathon gains, in 1 month, gains 30% or more, the following month averages a gain. Median, slight loss there. Positive more often than not. That's kind of fascinating. So you could do this for any other of these oil stocks and you would find the exact same thing. You cannot say the same for retail stocks. You can't say the same for financials. When those areas get extended, they pull back. When they have these above average gains. Very fascinating. I spent a lot of time just kind of geeking around on this last night. So just wanted to point that out. That was one that I kind of got caught on, and we just focus on that. So let's go back over here to the watch list. Give you a couple others while you're at it. You got Devon. It's also an energy stock, extended in the short term, 38% away from the 50-period moving average. Also the second highest yielding stock on this list at 2%, right about 2% there. FMC, also very extended, 36%, and Apache chilling at 35%, although today now pulls it back to, 29%. So there you go. What do you think about that, Cody? You like stats? Is it the stats your thing, man?
Oh, I do love the stats. Yeah.
I can barely, there you go, yeah. You like he's a stats guy. He's a sports stats guy, right?
Yeah, I mean, yeah.
It's good stuff, man. I like that because you can't You can't argue with numbers. Certainly, it may not happen again in the future, but you can't argue with, what's going on with numbers there. So it's better than having an opinion. I love it. All right, we're going to move on here. Hey, if you have questions, go ahead and ask some questions there. I'm going to take some time, hang out with you, and I'll go over some of the stocks in the news if you'll give me a second here. We'll go like this, and we'll say, hey, some of the stocks in the news. What do we got today? JP Morgan. This is going to be earnings related today. Beat by $1.14. Still sold off about 1.7% on the day. Is that odd? Everybody knows now. Hey, man, that actually isn't all that odd. Stock tends to sell off intraday. It does give a little bit of a positive gain there as a whole, but you've got names like PNC. You got Citigroup. These tend to average losses. We already know this going into it. So if I just happen to hop over to PNC, which is the next stock in the news, what happened? It averaged a sell-off throughout the day. The reason I share these stats with you, again, are not to try to seem smart. Anybody can pull data on stocks. It's so that we know what to expect. We know that financials are extended, and we know that the banks tend to bleed to the downside when they report earnings, the pressures to the downside. If you know to expect that and you own bank stocks, today was a non-event. You say, okay, man, the stats say that was going to happen. I was ready for it. I'm happy with that. It's going to be what it's going to be. Maybe see if it's still a stock you want to own or not. Wells Fargo sold off as well. Got a bit of a beating today, about 8% today. They beat by a penny. Weaker revenues, and they also increased their share buybacks, the stock buybacks. They're going to be, you're going to be hearing a lot more about that. We've already heard a lot of that, but that's what you got going on there. Oh, I'm in the wrong page. There you go. We're also going to talk about Alibaba. Alibaba and Baidu, these two are not added to that blacklist from China. So they didn't really do much today, actually. But that was yesterday's news, just carrying over into today. Baidu pulled back a little bit, but my gosh, look. It's so extended. Like, what else do you want? I'll go over Lennar real quick. $1 billion share buyback. That's about 4% of the entire market cap of the company, just so you understand there. And then you got Worthington. This is like a steel supplier. They have officially sold out their entire stake in Nikola. They are no longer participating there. And, man, that's a very interesting story there, man. Tough one, but interesting story. Yep. I love it. Can you share some guidance on precious metals, copper, and such as like your gold miners, things like that? You can look at a couple things here. GDX is a gold mining ETF, probably the most popular of all of them, currently trending lower. You can see the old downtrend here floating along. You can also look at smaller companies in here. I think you just add a J to it if I remember right. Yeah, these are your junior gold miners. Silver, SLV, if you're asking for like different things to look at there. Yep. I love it. How many stocks should I own in a Roth IRA and how many growth? So it depends on what you're shooting for. First, you want to know what the goal is. If the goal is to retire with $100,000 a year, you're 30 years old or whatever, then you've got to measure or model your portfolio after your goal. So there's no magic thing to say you should be 80-20, 70-30 or whatever. That's the general boring sort of rule they give everybody. You take your goal, model your portfolio after your goal. We do it for every brand new customer here. That's very, very important to me. You think valuations are going to stay high for a while? Well, first of all, high valuations are subjective, right? So do you think valuations will stay where they're at or be able to continue to justify existing valuations regardless of the money printing? I think, yeah, simple answer, yeah. Yep. What happened to solar today, man? Oh, man. So solar, we covered this yesterday and last week as well. Solar is super extended, right? Super duper duper extended. Solar, you got wind energy as well. All of that's very extended and well beyond current production of solar. I can't remember what day I did it. See if I can go back over here. There was a day that I pulled up the actual production, or was it a research post? You know, the stuff just blends together for me these days. I believe we talked about it here on the show, showing the difference between solar consumption. I think I said production, sorry. solar consumption and the valuations of a lot of these companies, the current prices and everything. So it's a pullback, just a pullback. No big deal there. Thoughts on Facebook? I'll just guess the question there. So it did come down towards the 200-day moving average. You're seeing that act as a type of support here in the short term. Thoughts on Facebook? I'm not sure what else. Do you own it, or what's going on there? How many individual stocks do you think the average investor should be invested in? I don't like that question. I don't like it. The reason was, so back in the day, one of my previous backgrounds was to teach Chinese investors how to trade in the U.S. markets. And what we found was that some people specialize. They just like to play one stock all the time. Some people like to cast a wide net. And so it's very hard to give a general answer to that. I don't know that there is a good general answer there. It's a matter of how much time you have to spend modeling a portfolio, if you're going to have a number of stocks, or tracking the individual stocks that you may own. That's a tough one. Yeah. I love it. They're picking on you, man. Yeah. Uh-oh, yeah, that starts a whole different argument there for some of the Facebook things. Yep. Kind of a percent gain would be reasonable for a trader who uses $1,000 every trade? Nope. Don't go at it that way. Do not go at it that way. Doesn't matter how much you risk per trade. It's we call it your batting average and your win-loss ratio. Those are the most important things first, because it doesn't matter if you're putting up 10, 20, 50 million dollars, whatever it is, per trade or not. If you're not successful enough and your winners are not some measurable amount greater than your losers, it doesn't matter. The number doesn't matter. So I always go the backwards route there and say, tell me your stats first. Tell me how often you're successful on a given trade, and tell me how much you win on your winners versus how much you lose on your losers. For our customers, we have a whole spreadsheet I've given out to them where you can track that. That's the most important thing. That's how every trader is taught, the Wall Street guys. First, it depends on your stats. You got to show the stats first. The money will come. Is there a certain date for inclusions into the S&P? Nope. Just as they meet and as the board meets and as they determine what they want to add. That's it. Yep. You want Tesla to get to $1 trillion. It's on its way, right? It's kind of hard to stop that train at the moment. Yep. I love it. Yeah, we've got an interesting week. So remember, next week is Monday is closed, and then wham! I mean, we've got a ton of earnings. One of the classes we did this week, the FinTips videos, you can go check it out on YouTube, was the earnings coming up next week, and I just went through and just showed, I mean, there's so much going on, and that's not even peak week, by the way. So, you know, you got a lot coming next week, so get your rest, be ready, and we'll be ready as well. In the meantime, I wish you a good rest of your day. Have a good long weekend, and we'll talk to you later. Adios.